It has taken me 10 years and millions of dollars to gain the education that I have today about energy. And that journey started with investing with an operator that allowed me to put my capital side by side with them with the same rights and preferences. And not only did they allow me to invest and bring a return, but they started to teach me the business. And a lot of people will get a basic understanding and take blind faith and jump in there. And that's never really worked for me. I am very analytical. I try to pick up and take other people's failures, right?
What if the biggest investment opportunities weren't on Wall Street, but hidden in plain sight? For decades, direct oil and gas investing has been the domain of insiders who understand the power of ownership and speculation. Today's guest, Mark Elliott, knows that world well. As the CEO and co founder of Summit Ventures and general partner of Gauntlet Ventures, Mark has spent over 25 years building, scaling, and investing in high performance companies, from startups reaching tens of millions in revenue to a portfolio returning names like SpaceX, Epic Games, and Klarna. He's a strategist, technologist, and investor who believes that real success and real wealth comes from balance, control, and long term vision. Today on the Executive Connect podcast, we're uncovering how direct ownership in energy and other private markets create true financial freedom, and why most investors have been locked out of the game for far too long. Welcome, Mark.
Thank you, Melissa. Pleasure to have an opportunity to spend some time with you today. Thank you for having me on the show.
Absolutely. Now, you've built a career understanding how systems from business operations to financial markets really work beneath the surface. Let's start with what direct oil and gas investing stayed so exclusive for so long. What's kept it a hidden secret for most
Yeah, so
investors today?
great question. And it's not that oil and gas is a secret. Everybody knows about it, right? Lots of people have invested in it, whether it's Exxon or Shell. But most investors have only seen oil through a Wall Street lens, right? So it's been through stocks or mutual funds or an ETF. But that's not how real money's made in this industry. The insiders, the operators, the family offices that have owned minerals for generations, they just don't buy energy stocks. They own the wells, they own the production. And today, I want to close this gap and I want to share something that historically has been reserved for insiders and family offices and make it understandable to accredited investors and high net worth investors who've never been invited behind the curtain. And so I think today's discussion is really going to demystify how direct ownership works, how the cash flow actually hits your account, what the risks are, and how it fits into a thoughtful and a thoughtful wealth and tax strategy that can be implemented in your own portfolios. And so my goal today isn't really to try to sell anybody on oil or convince you that you need to invest directly. My goal is to give you this framework that insiders use so you can decide whether direct oil and gas investments deserves a seat at your table alongside with real estate and private credit and other alternatives that you might be in.
I love it. Now I'm curious, is the biggest misconception that people have really around investing in oil and gas through the stock market? Or is there another kind of misconception people have about investing in oil and gas? Ready to lead smarter and invest wiser? On the Executive Connect podcast, we unpack executive strategies for wealth and influence. Hit the subscribe button now. Don't just watch, act.
Well, when you look at where the wealth is made in oil, people don't buy paper, right? They buy production. And I'm really drawing a line between two different things. Paper is about a claim to energy, right? That's a stock certificate. It's an ETF. But you're removed, right? Several steps removed from the physical asset. And so your outcome gets driven by fund economics, gets driven by headlines, right? How the market feels today. Production, which always trumps price, is about a physical product, right? Molecules coming out of the ground and being sold every month, where revenue is tied to barrels and not the mood of the market. And so insiders focusing on owning the source of the cash flow rather than the vehicle that sits on top of it. And that doesn't mean that stocks and bonds are bad, right? And wells are perfect. It just means that they're fundamentally different. And one is a financial product and the other is an operating asset. And so what I'll share today, right, is that we want to concentrate on the second category and be able to talk about how this can be structured in a way that busy accredited investors can actually participate without having to become an operator themselves. And so I think the real gap in oil is not that if oil and gas is risky, it's just that most people have only been shown the paper versions of energy while family offices and insiders quietly own the production.
Yeah, I'm curious. So I think about when I think about oil and gas, I think about direct investing. And it really, from my perspective, it really has changed my relationship between, me and my money. So do you think that direct investing changes the relationship between investors and their money? Or is it just like you said, tied back to the stock market? Is it just that simple?
I look at oil and gas and direct investing the same way that I look at multifamily in my portfolio. It is considered real property, right? And so I think when we look at all this landscape, go back and look at flipping houses in the 80s, right? Really lucrative. Today, pretty saturated. You better buy the asset right. You look at multifamily, right? I did very well in multifamily, and I'm sure at some point in the future I'll do very well there again. But multifamily has turned into a 10x or a 2x in 10 years, and that's a real slow return for where I want my money to grow, right? How does your money make money? And that's not a bucket that I want to be over allocated in today. And really within energy and parts of the market that are very capitally inefficient for Wall Street or for Fortune 500 oil and gas firms, there's great margin and very scalable, repeatable process because there's so much opportunity that's out there. And so this is just like somebody going, "Hey, we've put money into this stock, into this REIT." But now we're going to go direct and we're going to partner with an operator who's doing multifamily. It's really no different within the oil and gas space, right? So I think that the closer that you get to that asset, the better your returns are. Outside of some of these one hit wonders that we've all been in over the years, right? Whether it's a Tesla or it's been Microsoft or any of the FANG stocks that we've all done well on, when I go to everything else, that's when my stock and bond portfolio, nothing performs like this, right? Nothing performs like a direct multifamily investment or a direct oil investment. So this is just cutting out all the middlemen in order to increase the return. And so I think that's why this fits real nicely here.
Kind of what you were saying about the stock market, you're owning kind of the paper of your stock that you're investing in. But in oil and gas, you're actually owning the production and the price changes based on the cost of oil, right? So how do we look at that from business investing? Is it something as simple as reframing our thoughts to more a lesson from operators and entrepreneurship? Or is it because I think it's a real shift for people from I'm going to invest in a 401k, I'm going to invest in an IRA or the stock market. It's a complete different kind of hat that people have to wear, just like owning a business or working in a business.
I think diversification is important within portfolios, right? I have stocks and bonds in my portfolio, but I'm not going to put all my money there. And if the question was asked, I'd be the first to raise my hand. Who listening to this podcast right now thinks that we're going to have another black swan event in our lives, right? And when equities melt by 40 or 60%, where's that return coming from at that point in time? See, when you look at oil and gas and you're buying directly, and it's not part of the fee machine, it's not part of fund, it's not part of Wall Street, you have that monthly cash flow that's coming out of the ground. on an appreciating asset. And oil has always been volatile, right? You've always seen it go up and down. But over the last 109 years, it's averaged $65. But we don't peg anything on $65. We underwrite all of our opportunities to be very profitable at $40 oil. And let me back into some quick math, right? Because people are always talking about lift cost in oil and gas, right? You see layoffs with Chevron that are happening out in the Permian because oil and gas is around $60 today, right? $60 a barrel today. Well, most of these companies, because of their high fixed overhead, have to have $60 oil in order to be profitable. But when you get into the entrepreneurial side of this space, all oil wells have basically a service contract on them. We call them lease operating expenses. And to operate an oil well on average is about $5,000. So if you have 200 barrels of oil that are coming out of the ground on a daily basis, over a calendar month, that's 6,000. And if your operating cost on that oil well is $5,000 a month to keep it up and running and efficient, it gives you a lift cost that's a little over $1 a barrel. That means at $3 a barrel, we're making a return. Not a very good one, right? But we're not shutting the doors either. So we're not under the same constraints as Wall Street as to where profitability is. We make a ton of money at 40, at 65 or $70 oil, lights out, but we're still turning a profit at $20 oil. And so the point I want to make is that production, being in the oil business, right, is much, much different than being in a commodity business that you're tail whipped by the market. Whether oil's 65 or 40, we don't care. What we care about is how much of that black gold are we getting out of the ground.
Yeah, I love that. I want to switch gears a little bit and talk about your background. I find it really fascinating. Also, a cybersecurity enthusiast. You've actually written a best-selling book on cybersecurity. So, how do you think your background in tech and security translates into oil and gas energy investing? Because I think of cyber as a risk discussion, and I also think oil and gas is also a risk discussion from my perspective. I'm curious to get your perspective. Money Ripples is on a mission to help professionals just like you get their money working harder for you. Their clients free up an average of $35,000 their very first year without having to work extra hours. To show you how, they've put together a powerful training called Cash Flow Secrets, and the listeners of the Executive Connect podcast can get it completely free. Just visit moneyripples.com/secrets and enter the promo code EXEC.
Yeah, not so much from being in tech or writing books, but the exposure that gave me to deal flow. I was able to get in a private client group that gave me a lot of exposure to opportunities, right? So, I mean, I have been in and out of hundreds of investments, and and it's really given me a lot of discipline as looking at capital allocation, right? And by sitting, I don't even want to call it second chair, but by sitting on the team that was doing these investments and taking a lot of look at these opportunities, it made me learn capital allocation from great capital allocators. And when I look at oil and gas as it relates to risk, right, it's really understanding. uh, I don't want to say to de-risk, but how to evaluate, how to underwrite. What are you looking for? And this is something that I'm going to share at the end. We've written this blueprint for high net worth individuals, family offices, and accredited investors that is a definitive guide for insider strategies and how to underwrite these opportunities within oil and gas. And so when you look at oil and gas, what you've got to be looking at is the rock, right? Because the geology determines everything before you ever put a drill in the ground, right? The competency of an operator, right? Do they know that area? And I don't think that people understand this. I had an investment that I did one time importing wine from New Zealand. And we have a partner of ours, Nunzio Alalito, who owned Alalitos on the Wharf in San Francisco. Their family was in shipping, but this guy was also the sommelier out of London. So he was over all the sommeliers across the globe. And when you drank wine with this guy, he could start to describe the roots or the texture of the stones or would start to talk about the dirt. And we've come to expect those stories and somebody who can tell us about the notes that were sloshing around in our glass, right? Good operators are like that too, right? Their intimacy with the dirt that's under the ground and how it reacts and what those formations, right? So that operator is very important. You have the operator, the geology, and what makes or breaks so many oil projects is the infrastructure. Right. When you drill oil, you get a lot of water that comes out of the ground, right? I mean, this is where the sea used to be, and there's salt water that's trapped underneath that ground. So not only does oil come up, but a lot of salt water comes up. And if you don't have infrastructure, you have to haul that water off at $4 a barrel. If you have infrastructure, a saltwater disposal well, it can cost you 20 cents a barrel to put it in the ground. So infrastructure helps with long-term profitability. So if you can get the rock, the operator, and the infrastructure right, that's the majority of a sound decision. The rest of it's contractual, right? That's how do you have alignment with the operators, the investors, and the sponsor of an opportunity so that that operator is rewarded based on results and just isn't showing up to get carry in the deal because they can smile and they're in the oil and gas business, right? That gets back to that pie that we talked about, right? Is this opportunity equally weighted? Is it good for the operator? Is it good for the sponsor? Is it good for the investor, right? And when you have that equally yoked, it works long term, but it's not like the old days, right? And this is a separation. There's a real sexy part of the oil business, Melissa, and it's these wildcatters, right? Go back to the stories of Spindletop that happened in Beaumont, Texas, right? You had a well that produced hundreds and hundreds and hundreds of thousands of barrels right out of the get-go. That's amazing. Put your picture on the cover of Fortune with that one. And you look at this industry, and anybody that followed their parents or their granddaddy into the oil business and they went to school, well, they went there to be a petroleum engineer, a geologist, or a landman. And what do all three of those groups of people get rewarded for? They get rewarded for the next big discovery, right? They get rewarded for being able to lease up thousands and thousands of acres. They get rewarded for pulling that production out of the ground and making hundreds of millions of dollars. They don't get rewarded for what our thesis is in this business. And our thesis is to siphon off the neglected assets of the majors and the mid majors that were left behind. And so when you look at this challenge that's there, um, you know, you really got to break down the industry, right? And I think that this, if you look at all the drills that are out there, most people don't know this, but the majority of oil and gas in the United States comes from small business. It's not from Exxon and Shell. They're more global in perspective. And when you look at these little drills done by little companies, they're typically $1 to $5 million projects, and they're sold to friends, family, and fools. And I say that quite harshly because it's a flip of a quarter, right? That's that risk on that you're talking about. That's not a place that's good for my money. I'm very risk adverse. I'll take a calculated opportunity that I understand and know how to get all the way through the door on, but I'm not going to put capital at risk, right? So that's that kind of bottom part of the market that you have probably been exposed to that's risk on. If you go to the top of the market, you've got the majors and the mid majors, and the majors are doing multi-billion dollar projects, and the mid majors seem to have a floor of around 100 million that they never go below. Every once in a while on a blue moon, you'll see them in a $50 million project. But definitively, Melissa, between 5 and 50 million is blue ocean. There's very little to no competition, a very repeatable process that you can go in and clean it up with a very disciplined approach. But that part of the market is not economically feasible for the big boys. It's capitally inefficient. And so it really begets the question is how come other companies like ours haven't stepped into the space and snapped it all up? How come Wall Street hasn't snapped it all up? And there's a couple of us that are out there across the country that are doing this right now, right? But it really begets why they haven't done it. And the reason that they haven't done it is that nobody can, right? That sounds like, what do you mean nobody can, Mark? Not the institutions, not the funds, and it's not because they don't have the capital, Melissa. It's because there was this unintended vacuum that was created by the ESG movement, right? So this is this clean and green. that we're going to have wind and we're going to have solar. And these things are very important to humanity. And when we get past that capital destruction, like we saw in the dot-com days, our company will be investing in green technology. But we're not there yet. Here's the facts. Over the last 14 years, as a society, we've invested over $1 trillion in green energy, and it only represents 3% of the world's energy needs. And so when we really peel back the ability that I can see you on the screen and you're not fuzzy, that comes from oil and gas. And people don't realize the uses of how it's used. Only 28% of energy is used for the transportation of goods and services. The great majority of it goes to eyeglasses and contacts and aspirin and other life-saving pharmaceuticals and MRI machines and surgical tubing, toys, diapers, pacifiers, and anything with a tire, including the Tesla that a lot of us drive, right? Those fan blades that are made for wind energy, that's oil. Solar panels, that's oil. And I think Jamie Dimon said it best. He said, for the foreseeable future, we will need reliable, clean energy, not only for ourselves, but for our allies, right? This is truly a national security issue and in an area that demand is growing in, right? We hear about major companies that are pulling out of the Permian right now, laying off 30% of their workforce. Well, that's because their fixed overhead is too high, too many jets, too many fringe benefits, right? And so they need $60 a barrel to get it out of the ground. But that's not true for more agile companies that are out there, right? And so we can go in and I think Warren Buffett probably taught us best, right? The time to buy is when there's blood in the streets, right? These become opportunities, and the future's bright. Get better sunglasses, right? Because there's going to be the difference for us to fill a gap where capital's inefficient for a place that has a lot of demand. Now, here's a really interesting statistic. If you go back to 1990 to 2020, energy production grew by 50% due to the demand. And right now, our global population is about 8 billion people. And the IMF says that we're going to be at 9.7 billion people by 2050. That is another 50% increase in energy demand. Not so much in America, but think of countries like India, where the middle class is growing, right? And so today, production demand is between 104 and 105 barrels a day and growing. So this 50% increase is like finding 7 new Saudi Arabias. Take that. In effect, you're looking at a country that can manipulate prices across the globe due to the amount of oil that they have. We need to find that 7 more times, and we haven't had another big discovery in the United States. The last one around the globe was in Guana. And so, what do we have when we step back and we look at this as professional investors? We've got increasing demand and we have a shrinking supply right now. What typically happens to price, right? I think today it's being manipulated, but eventually you won't be able to manipulate it. As that demand grows, as scarcity kicks in, what we're looking at is an area that is underweight in most people's portfolios. But even where the price is today, to outperform the S&P 500 is laughable because if you look at that data over the last 25 years, it's an 8.4% annual return inflation adjusted. And, therein lies the opportunity for all of us, but it takes education to get there, right? Think about the first time that you invested in multifamily. Think about the first time that you invested in storage or private credit, right? And if you put it all into perspective, it's no different than the first time that we all did a mortgage. Going through that process, the very first time, you didn't know whether you were getting those keys until the deal was done. It was always one more request, one more, right? And it's the same thing with getting with education. And so my hopes for all of our listeners today is that we can start to bridge that gap so people understand this space and have the ability to take advantage of it for their families and generational wealth that they're trying to
Are
create.
you someone with a demanding job but tired of the 9 to 5 grind? What if you could build a profitable side hustle without sacrificing your full time career? Our new partner, Book Profits, can show you how to turn your limited free time into a thriving online business. Learn how to find, sell, and profit from used books all on your schedule from the comfort of your own home. Not crazy tech skills needed and no major upfront investment, just simple strategies that fit into your busy lifestyle. Visit the URL on the screen for a free training today and learn more. I love that. I think there's so much to unpack there, but I think let's talk a little bit about, you know, for the listeners that are looking for to move past and beyond passive investing, what's your advice? How can they start thinking more like owners, entrepreneurs, not just participants, as if investing in the stock market? Do you have a playbook for investors?
Money is a unit of time, right? And those units of time buy freedom, right? What's our most valuable asset? It's time. Probably next to that is access, right? And in order to create freedom, you can't do that by turning a screwdriver, right? You can't do that by sifting sand, right? Having those jobs. So how are you building freedom within your life? And this isn't about oil and gas, right? There's a lot of investments that can provide cash flow, whether you're investing in a business, right? And a lot of times you're trading time for money there unless you can rise above it and are at a point in your life where it's time to be chairman of everything and CEO of nothing, right? Because that's what you see family offices doing, right? They own businesses, they own industries, right? They become influential, but they sit on top from a strategic. And to boil it down, it really reminds me of a quote out of a book by Michael Gerber, The E-Myth, right? And he makes a statement in there is that you're either working on your business or you're working in your business. And it's the difference between strategic and tactical. When we take that thought process and we apply it to our portfolios, simply put, how does your money make money, right? Real estate, right? That's the 800-pound gorilla where everybody has been putting their money to be able to get that residual returns, right? To be able to get those cash flows, to have the tax advantages of accelerated depreciation or being able to straight line things over 7 years, right? And it's finding that in order to create freedom, right? So your time in retirement, right, isn't stressed, right? That it's compounding, that you're building for future generations. And I think this methodology is a lot like the Patek commercials, right? This watch isn't for you, it's for the next generation, right? So this is really about scaling generational wealth because the lessons that you learn in oil and gas, you will be able to teach to your children so you can continue to compound not only with money, but with the intellect of how to get this done. And I think this really applies to many market segments, but you've got to build residual. And if you're going to build that residual cash flow, you might as well do it on top of an appreciating asset.
I love it. So, for those that are a little still on the fence, how can investors do the proper due diligence without getting overwhelmed by the technical details or their lack of knowledge in the energy sector? Is there a suggestion you have for them?
You know, it has taken me 10 years and millions of dollars to gain the education that I have today about energy. And that journey started with investing with an operator that allowed me to put my capital side by side with them with the same rights and preferences. And not only did they allow me to invest and bring a return, but they started to teach me the business. And a lot of people will get a basic understanding and take blind faith and jump in there. And that's never really worked for me. I am very analytical. I am very data driven. When the data lines up, I still want to talk to people and see what their journey's been. And it's I try to pick up and take other people's failures, right? And where did they skin their knee? That if I can just watch what they did and not replicate that, I'm not going to skin my knee, right? Or, is it invested, in the investment world, I'm not taking a 10 or a 15% hickey on a deal, right? What did they do wrong there? And so, at the end of this podcast today, I'll provide a URL. But again, I have encapsulated all this information in a blueprint that really breaks down three parts, of what needs to be looked at. One's the financial side, right? And that's getting into structures, it's getting into risk that happens on the financial or their contractual side, what you need to understand there. And then it really gets into what veteran operators look for in the rock, right? What's that risk that's below the surface, right? From a geology perspective. You need to understand things like how much oil's in the ground, right? So they refer to that as EURs, or estimated unrecovered reserves. What's been left in the ground, and how much of what's in the ground with today's technology do we think we can extract, right? So understanding those risks that are underneath the ground. And then the last part of this report that I've put in there is, how do you do due diligence in order to create wealth within energy, right? And that's things that you need to be looking for within the rock, within the operator, within the infrastructure. And then ultimately, what does alignment look like? Is everybody in the same boat, rowing in the same direction, wanting the same outcome, right? And when you can get those pieces put together, you've got a good opportunity to invest in. And so again, this white paper, right, that we've put together is oil and gas demystified, and really is a blueprint that will teach people that, right? Because you're going to get an understanding from this podcast to make you want to start the educational process. And then where do you turn? And the problem is that when you turn to the internet, there's a lot of unstructured data out there. There's a lot of stories, and how do you cut through the noise and go, okay, this is right. And I believe that we have a material, this white paper, that can put you well on the road to do that. And then you'll have your own educational trail from there. And we're always happy to hop on a call and give some education ourselves.
I love it. Thanks for that. I have to ask, if you could give your younger self one piece of advice before your first major investment, what would it be?
Sit on the sidelines and paper trade.
I love it. I love it.
Yeah,
I think I
I jumped quick in the beginning, right? And before I understood everything, but I didn't know what I didn't know, right? And I think when you don't understand something, you can't react on it. And I had some things that lost, and I had some things that I got really lucky on. But looking back in hindsight, I didn't have the education or the expertise in my first dozen deals that I did to know how to underwrite it other than what was being sold to me. And so I think there's power in understanding. And from our perspective, good investing partners are educated investing partners, right? And so we want to put the education out there, not just so people get the comfort to invest in oil and gas, but so they can become good partners, right? So they show up with the right intelligent questions, and it allows us to have more eyes on an opportunity.
I love it. That's so great. Any final thoughts, Mark, that you want to touch on that we didn't hit on today that you want to share with our listeners? And then please share a little bit about where our listeners can find you, where they should go to get that blueprint on your website.
I think when you look at the broader context of a portfolio, I view oil and gas as an alternative income or oriented portion or sleeve of a portfolio, much like real estate or private credit, right? This is not to replace stocks and bonds. We're not advocating that. This is a way to diversify from purely a financial asset into real cash flowing operating assets. And I think Ray Dalio taught us best, right? He said that we want to have our money in 8 or 9 uncorrelated buckets. And when we look at the advantages of oil, A, it's an inflation hedge. B, it is uncorrelated to the stock market, and it's appreciating asset, right? And so you're getting those monthly cash flows. When that stock market melts by 40 or 60% at some point in the future, your checks are still showing up on an appreciating asset. And so for the right investors in the right structures, this really checks a lot of boxes, right? For potential cash flow, for exposure to real assets. and for powerful tax treatment. But like every private deal we've all looked at, it's not one size fits all. It requires education. It requires an understanding of the risk and an overall alignment with your family's plan. And this is exactly what we want to give to you, whether it's on this podcast, the next one that we do, it's to give you the language and the framework to evaluate opportunities intelligently, not emotionally. And really, if we were to summarize this, right, we've kind of talked a little bit about what insiders do, right? They own production, just not paper. But most people have never been able to see anything except from the paper from Wall Street. And on our next episode, we're really going to dig into what I call the tax advantaged superpower of oil and gas investments. As I had mentioned to you, I have been in and out of hundreds of deals, but I have never seen something that is tax advantaged on the front end, when you hold the asset, and when you exit. And I'm ecstatic to be able to share how intangible drilling costs work, how investors have been able to historically take 100% of their investment and write it off against ordinary or passive income, how depletion works and how that plays into your taxes. And and truly, when structured properly and in compliance with current tax laws, how oil and gas can be the most efficient tax advantaged asset class that's out there. And so we're going to hand all that to you guys in plain English. I can be found. My email address is MELLIOTT@summitven.com. And this white paper that I've referred to a couple times called Oil and Gas Demystified, you can also find this on our website. If you go to summitven.com, so SUMMIT, V as in Victor, EN.com /executive connect. Quick little form fill. Let us know that you're accredited. We're going to get that report out there. No obligation to ever talk or do business with us, and truly our pleasure to educate you and hope that this starts a very long and profitable journey for you.
Thank you so much for being here and sharing your knowledge with our listeners. That's the Executive Connect podcast.